How hard is the personal lines insurance test? Welcome to the quiz. What is key person insurance, typically used for in a small business context? Is it A, insuring the physical keys to the business? Or B, life or disability insurance on a crucial owner or employee to protect the business from financial loss? C, insurance for the company's vehicles? Or D, a type of health insurance for executives? The answer is B. Key person insurance is life or disability coverage on a vital owner, partner, or employee whose death or disability would cause major financial harm to the business, lost revenue, loans called, replacement costs. The business is the beneficiary and uses proceeds to cover losses, hire replacements, or stabilize operations. Option A, literal keys. Option C, vehicles, commercial auto. Option D, executive health. Next question. What is the purpose of an assigned risk plan like an auto insurance pool? Is it A, to provide insurance for high-risk drivers who cannot obtain coverage in the standard market? Or B, to assign blame in an accident? C, to assign agents to specific territories? Or D, to risk assigning policies? The answer is A. An assigned risk plan, or residual market, e.g., state's automobile insurance plan, is a state-mandated pool where insurers share the risk of insuring high-risk drivers, bad driving record, DUIs, no prior insurance, who are rejected by standard carriers. Insurers are assigned applicants proportionally and must provide minimum liability coverage. Option B, fault. Option C, agent territories. Option D, nonsense. Next question. What does mortgage insurance, PMI/MIP, refer to in a home loan context? Is it A, homeowner's insurance? Or B, insurance that protects the lender if the borrower defaults on the loan? C, insurance that pays off the mortgage if the borrower dies? Or D, title insurance? The answer is B. Private mortgage insurance, PMI, or mortgage insurance premium, MIP for FHA loans, protects the lender against loss if the borrower defaults and the home is sold for less than the loan balance. It is required when down payment is less than 20% and is paid by the borrower until equity reaches 20 to 22%. Option A, homeowners separate. Option C, mortgage protection life policy. Option D, title protects ownership. Next question. What is the primary characteristic of a guaranteed renewable health or disability policy? Is it A, the insurer cannot cancel the policy, but can increase premiums for an entire class of policyholders? Or B, the premium is guaranteed never to increase? C, the policy can be renewed without a medical exam? Or D, the benefits are guaranteed to increase with inflation? The answer is A. Guaranteed renewable means the insurer cannot cancel or refuse to renew the policy as long as premiums are paid, but can increase premiums for all policies in the same class, not individually. It provides long-term protection with rate stability within the class. Option B, level premium rare. Option C, non-cancelable stronger. Option D, inflation rider separate. Next question. In a personal auto policy, PP, which of the following individuals is typically considered an insured under the liability coverage? Is it A, any family member residing in the household? Or B, only the person whose name is on the policy's declarations page? C, any person who drives the insured vehicle with permission, regardless of residence? Or D, both A and C? The answer is D. Liability coverage in a standard personal auto policy is designed to protect against legal responsibility for causing bodily injury or property damage to others in an auto accident, and it extends to a broad group of people to make sure coverage applies in common real-world situations. The policy defines insured to include the named insured and any family members living in the same household because these individuals are likely to regularly use the covered vehicles, so the policy protects them when they drive. It also includes permissive users, meaning anyone driving the covered auto with the named insured's permission, even if they don't live in the household, because the owner allows them to use the car and wants protection if that driver causes an accident. This combination ensures the policy covers both household members who might drive frequently and occasional permitted drivers like friends or neighbors. Limiting coverage only to the named insured on the declarations page would be too narrow, as family members and permissive users commonly operate the vehicle and need liability protection too. Option A alone misses the permissive users who are clearly included. Option C alone leaves out resident family members who are automatically insured even without specific permission for each drive. Only combining both household family members and permissive users matches the typical broad definition used in standard PAP forms to provide realistic liability protection. Next question. What is the primary purpose of the other insurance clause found in many policies? Is it A, to prevent the insured from profiting by collecting from multiple policies for the same loss? Or B, to encourage the insured to purchase multiple policies? C, to determine which agent receives the commission? Or D, to clarify which policy has the higher deductible? The answer is A. Insurance is built on the principle of indemnity, which means the insured should be restored to their financial position before the loss, but never allowed to make a profit from the claim. When someone has more than one policy that could cover the same loss, for example, 2 auto policies or a homeowner's and an umbrella policy overlapping, the other insurance clause steps in to coordinate how the insurers share or sequence payment. It ensures the total payout does not exceed the actual amount of the loss, avoiding over-recovery or unjust enrichment for the insured. This protects the integrity of the insurance system and keeps premiums reasonable by preventing windfall gains. Encouraging people to buy multiple policies would actually increase the chance of overinsurance and higher costs overall, which is the opposite of what the clause achieves. Agent commissions are handled separately through producer agreements, not through this clause. Deductibles are specified in each policy individually and not compared or clarified by the other insurance provision. The main goal remains stopping profit from duplicate collections on the same covered loss. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.